Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, markets, I'm just surprised. Suddenly we are seeing a fall. Suddenly we are seeing a rise. Now again, Nifty managing to hold on to 22,600, now nearing 22,700.
Absolutely. In fact, the markets are behaving like that, Vinny, today. But yes, now at the day's highest point for the benchmark indices, 22,700 reclaimed for the Nifty. You have Nifty Bank that is still subdued in trade today, but broader markets are also participating in the up move right now. If you look at it, seeing good recovery for broader markets as well. So that's the way how the markets are looking like at this point in time, Vinny. Yes, a good uptick, and hopefully we should be able to sustain over the course of the next 2 hours.
Sustain over the next 2 hours, that's the key, right? Every time we see a change coming in. But yes, that's how the market is looking like. As of now, seeing that recovery from the day's lowest point, trading at the day's highest point. But Gravita, that's the stock we're going to be starting with and putting focus on first. The company reported its Q4 numbers, 15% growth in terms of revenues. Margins a slight bit of a subduedness, 10 to 15 basis point contraction in terms of EBITDA margin. But other than that, the net profits of the company are also seeing a growth. Now, to talk more about that in terms of the numbers of the company, where should one expect the company to move on from here on, we do have Yogesh Malhotra, whole-time director and CEO at Gravita India, joining in with us. Thank you so much, Mr. Malhotra, for joining in with us this afternoon on ET Now. I want to start by talking with your volume numbers. Interestingly, they've grown around 15% YOY in the quarter that we've seen gone by. What led to the outperformance in the volume growth, and do you think we will see the volume growth somewhere moving much better than this? The outlook in terms of volume growth over the next few quarters, where is it headed?
Yeah, so good afternoon first. We have grown at around 15% this quarter. But if you look at the larger period, for the past 5 years, we've been growing 22% on CAGR on revenue numbers and around 74% on PAT numbers for the past 5 years. And our future outlook is also that we would grow at around 25% CAGR on revenue numbers for the next 4-5 years. And the profitability would be even higher at around 35% going forward for the next 4-5 years. So we are increasing our capacities both in India as well as overseas. In this year, we have increased the capacities from around 227,000 metric ton to 300,000 metric ton, so which is an increase of 29% capacity increase. So, of course, there's a new wave where everybody is now interested in recycling and sustainability. The society is also positive, and the governments are also backing up. In India, there is a specific tailwinds with EPR and battery waste management rules that are focusing on organized recycling in India. So all these factors are basically giving us the boost that is required to achieve our 25% growth rate for the next 4-5 years going forward.
Right. So good afternoon, Mr. Malhotra. This is Cheryl joining in the conversation. You did touch upon what you're expecting for the year that we are in right now. But if you could tell us what actually gives you the confidence for delivering such a strong revenue CAGR growth, or even the profitability growth that you are witnessing, or you are expecting about 35% plus profitability growth with 25%, over 25% ROC, and also over 50% share coming in from the value-added product. What gives you the confidence for that? Also, what are the levers of growth that you are envisaging going ahead?
I mean, if I talk about India, there's a huge shift from unorganized to organized happening in the recycling space, which is backed by the policy framework that India has gone after. Both extended producers' responsibility and battery waste management tools are the key factors that is affecting this shift from unorganized to organized sector. So because it's more sustainable if you do it in an organized manner, and also it's more environmental friendly. Both, I mean, it's not only from the government point of view, but the companies, the corporates are also understanding this fact, and they have increased the overall content, recycled content in their products, not only in India but throughout globally. That is one factor. We at Gravita have that advantage in the sense that we are operational in not only in India, also in India we are one of the only very few companies that are having more than one recycling plants. In fact, we have 4 plants in India covering North, South, Central India and West India. Apart from India, we also have our own plants in many other countries. We have a very vast procurement network spreading spread it across 21 countries across the globe, which gives us access to cheaper raw material. So all these factors combined gives us and we have seen in the past 5-6 years also, we have taken advantage of all these things and have grown, as I mentioned earlier, also at around 22% CAGR. And the profitability will increase much faster because of the economies of scale and also our global operations.
Right. Mr. Malhotra, what is also important that what we're seeing is that the debt of the company has risen to around 450 crores as on 31st March 2024 versus around 310 crores last year. What has led to this in terms of the upmove that we're seeing in terms of debt? Why is it risen in trade, as well as what is it that you are expecting, and you have plans in terms of expansion plans? Are you expecting the debt to further rise from here?
So the debt in the longer run will go down because, as I mentioned, because of economies of scale and also because of larger domestic scrap availability. Unfortunately, in the third quarter and to some extent in the fourth quarter, we were affected by the Red Sea and there were some logistics interruptions, and because of that, the inventory levels have also gone up, and to some extent, the accounts receivable have also gone up. So this is only a temporary phase. We are very confident that because of availability of local raw material, domestic raw material, the inventory levels would come down going forward, and the working capital cycle that is currently at around 90 days, in the next 4 years it would come down to around 60 days. So we are very consciously reducing our overall working capital cycle, which will impact the debt also. So on the absolute, probably the debt would go up, but the debt equity ratio would come down, and the debt EBITDA ratio would also come down going forward.
Let's talk about the revenues. You did speak about the domestic market, how things are shaping up on that particular front. But given that you generate about 40 to 50% of your revenues from overseas operations and exports, if you could tell us how is the demand environment that you're witnessing in the international market? What sort of an outlook do you have in that particular domain? And as well as, if I could squeeze in one more, is just to understand that what's the revenue share that you're targeting from your various segments? You're present in plastic, rubber, as well as in aluminium recycling.
So the demand for recycled products have gone up throughout the globe. So we are very confident of increasing our capacities, and there is no dearth of market for the products that we are making. Incidentally, we are also targeting 50% value-added products in our kitty. Currently, it stands at around 45%. So that is another thing that we do that gives us higher margins. In terms of what was your second question? Can you just come back with your second question, please?
Yeah, I just wanted to understand that what sort of a revenue are you targeting going ahead in your various segments that you have, the plastic, rubber, aluminium recycling?
So currently we have 4 verticals of lead, aluminium, plastic and rubber, and lead of course is the biggest one with around 85%. In the next 4 years, we want to reduce it to less than 70%. For that, although lead is also growing at a very fast pace, we believe that aluminium, rubber and plastic would grow much faster than this. In addition to these 4 verticals, we are also targeting other verticals like lithium-ion battery recycling, paper recycling and steel recycling. So these will also contribute to reduction in the total dependence on lead recycling.
Thank you so much, Mr. Malhotra, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show, as well as understanding where the company is headed. But with that, let's just slip into a very short break. We'll be back with more.
No, thanks for staying with us. Let's connect with the management of Federal Bank. Shalini Warrier, Executive Director with Federal Bank, joins us. Shalini, good afternoon. Thank you for joining us. I was looking at the numbers, and for me, there are 3 headlines which are coming out. Q4 numbers are in line with estimates. Other expenses have gone, and asset quality for the quarter has gone by. But the fourth headline, which everybody is curious about, is update on the succession plan. So where should we start with?
Let me start. Good afternoon, Nikunj, and good afternoon to the viewers. Thank you for having us here. So I'll start with the first three headlines that you mentioned. It's been a quarter of consistent and sustained growth, as you have rightly pointed out. Whether it's on the advances side, 20% year-on-year growth, deposit side, 18% year-on-year growth. We've also, worked very extensively on our margins, as we said last time when we had met. So NII at a record high of 2195 crores, shown an uptick in NIMs to 3.21%. Credit quality, something that we've always prided ourselves on, and you can see very clearly the numbers show that very thing. On your screen, the numbers are there. Down 16 bips on gross NPA, down on net NPA. So it's really been a good quarter in that sense. There is, as you rightly pointed out, there is an expense aspect that has been rightly highlighted. If you see it, it's in our investor deck. We've shown it very clearly. We've had to take a one-time provision arising out of the bipartite settlement, not so much for the employees, but for the retired employees. This was something that we had to do to catch up, to do the regular required accruals from a pension perspective. That's at 162 crores. This is a one-time impact, Nikunj. And if you back that off, you can see very clearly that the rest of the metrics look in line with investor expectations, in line with our own expectations. It's a good set of results. So that's really where I would like to start with, and then take your further questions, Nikunj.
Okay. I'll take the liberty of jumping the gun here, and you'll really appreciate my curiosity, given that you're a listed stock and there is a lot of curiosity and a lot of, I won't use the word anxiety, but there is a lot of perhaps speculation in terms of the succession planning at Federal Bank. And what stage is the succession planning at?
So as we've said before, and the board is seized of the matter. The board is working on it with a search committee. The board is in the process of putting all the recommendations together, and the board will do what is needful. We've got time. Sham's here till September 24th, so we will work on that timeline, Nikunj.
And as per the statutory requirement, you will have to perhaps give Reserve Bank of India a few names. Has the board finalized on those new names? What was your last communication with RBI?
The board is working on it, as I said, with the search committee that is working on it, Nikunj.
And when will the decision be taken?
Sorry?
When do you think the decision would be taken? How will the process move?
In accordance with the timelines, as you rightly pointed out, there are regulatory timelines that we need to adhere to, and the board will work on those timelines, Nikunj.
You'll appreciate my curiosity. So once the board decides,
Yes,
the names would go to Reserve Bank of India, and then Reserve Bank of India perhaps will take a final decision based on the search committee or the nomination committee. So if Sham's retirement is due, I think, in September, how many days before that you expect to hear from Reserve Bank of India in terms of the final decision?
That's probably a little difficult for me, Nikunj, to say, to be fair. The names need to go in, as you know, as per regulations in the month of, in a short while from today. And once that is done, I think it's up to RBI. I'm sure everybody is conscious and cognizant of the fact that the transition has to be a smooth and orderly transition. And I'm sure that will definitely work. I think it's also to highlight the fact that, the board is working very closely with the management team on this.
Spoke to Sham last. He said he was open to all options, internal as well as external. Has the view changed, or the view is still the same?
The view has been what we've said all along. It's the best candidate for the job.
So the board is open for an external name also.
I'll have to repeat myself, Nikunj. The best candidate for the job. Yeah.
No, I'm just being very careful here. You understand that this is very sensitive, and given that there are lots.
I understand. Yeah.
So I really appreciate that you've been very frank. You've shared as much as you can, and there's a process, and which is what I would urge everybody who's watching those show, that please respect the process. Do not speculate. Let the board decide. Let RBI come up with the final verdict, and rather than speculating, ye hone wala hai, wo hone wala hai, I'm just saying this on air that let the time decide, And
yes.
I guess I'm sure.
You've said it very well, Nikunj. There is a process. All banks go through it. We will also go through the process. You rightly put it together.
Okay. I'm going to change gears now.
Yes.
And change gears back to numbers. The cost to income ratio, which you said that it was a one-time uptick. Now,
Yes.
for the longest time, Federal Bank has made a case that they are working on bringing the cost to income ratio down, and you will see impact of that in each quarter. And that trajectory was on until last quarter when we saw this one-time bump up. So as we talk about FY25 and beyond, sequentially, where do you see the cost of income ratio declining then? Where do you think it will eventually settle at?
So, given the fact that, as you rightly said, this quarter, I think you've got to back off the one-time impact that we've had. Where will this settle off? Like we've been saying for quite some time, we are in the range of about somewhere between 48 to 50 odd % is where we believe the cost income ratio will be in the foreseeable future. Two parts to it. One, obviously, is the question of what we're doing from a income perspective and all the metrics that you look at, whether it's growth in deposits, growth in assets, whether it's our fee income growth, which has also been admirable at 14% year on year. All of those metrics are working well and are working in the right direction. From a productivity and enhancement perspective, while we've grown branches, as you know, Nikunj, 75 in additional branches in FY23, 140 in FY24, we've ensured that those branches are in a position to become profitable earlier than what used to be our historical break-even periods. The kind of products we sell in those branches, the nuances around, how much of CASA they do, how much of gold loans they do, how much of fee income they do have all helped us. So it's no single kind of silver bullet when it comes to cost income ratio, but all these items, the top line, as well as enhanced productivity from the costs that we have, will help us to get to that number. As you know, back out Q4, we are on the right trajectory.
I'm just looking at your operational performance, and I've had the pleasure and privilege of tracking Federal Bank for many years now.
Yes.
If I say that this has been the strongest operational quarter for Federal Bank in its history, will I be correct? That's what my data is indicating.
Yes, I would endorse what you said. It has been a good quarter. It's been on the back of a lot of sustained growth. You followed us, as you rightly said, Nikunj, for many, many quarters in a row. We've been, we've done what strategically we're on the right track to do, which is consistent, profitable growth.
The image which an old-timer would have, Federal Bank means Kochi, Kochi means South, and that's where all the business is coming from. But that is changing. Walk us through that. How much that has changed?
Over the last few years, a lot of that has changed. If you look at it from a distribution perspective, for example, 1,504 is the number of branches. It's around 600 in Kerala. Yes, the density is high, but we haven't grown branches. Where we've grown is like Tamil Nadu has become very big for us. Karnataka, Andhra Pradesh, Telangana, Gujarat, they've all become much larger. A very large part of what we do from our fintech partners is non-Kerala. The salaried millennials of the Bangalores and the Gurgawns and the Hyderabad are the kind of customers that are coming through that. The entire presence we have in the wholesale banking space, particularly in corporate banking, is definitely very much outside Kerala. So whichever lens you look at it, whether it's the business lens, the distribution lens, the customer profile lens, we are a national player now. And, we are seen very nationally. For a fact, Nikunj, that we're working with you very closely on ET on the go in cities that have no close proximity at all to Kerala. So all of these are going to show very clearly that we are a very strong national player.
And thank you for supporting us. I mean, that show is just coming out very well. I hope you saw the Ahmedabad episode. If you haven't, I'll send you the YouTube links because you've just tried over the weekend. My next question is about, for example, Fed Bank unlocked a lot of value in FY24 by taking a subsidiary public. For shareholder, that is unlocking of value. Are there plans to unlock something in the next 12 to 18 months now?
You look at the other associates that we have, AGS Federal on the life insurance side, Equirus on the wealth management side, and FedServe, which is 100% operations. I think very clearly the operation subsidiary remains where it is. It is a captive operation subsidiary. The other two, at this point of time, they're both in very, very different businesses. We work extensively with both of them to enhance our own presence in the life insurance business and the wealth management business. At this point of time, I can't comment on any specific plans on those, Nikunj.
If you
They're very, very different businesses also, right, Nikunj?
Very different businesses which require different scale and different kind of impact.
Yes.
Has your business got impacted after the new guidelines from Reserve Bank of India on co-branded credit cards?
So on co-branded credit cards, yes, we have paused the co-branded credit cards that we had. We had partnerships with a few partners. We have paused them temporarily. At this point of time, we're working through all the requirements. While we do believe we've cleared most of the concerns that RBI would have potentially had, we are in the process of collating all of that. We will go back to RBI with a clear plan of action on resumption. Very difficult to again give timelines as to what RBI will say after that, but we are well on track to go back to RBI very shortly with all our kind of submissions on the various aspects of co-brand credit cards, Nikunj. But at this point of time, we've paused it. Our organic credit card continues to do well. We do have a very strong proposition on our organic credit card that continues to chug along quite well, actually, both in terms of card outstanding and spends, where we are gaining market share. We have a segment, we have a product for all our segments, whether it's the high net worth Celesta, the Imperio, the Signet. We've also done UPI on credit cards. So we're not, we're still growing our cards business. It's just that the co-branded ones will come back in due course.
Okay. I would like to share with our viewers that Fed Bank or Federal Bank is all poised to be almost like a 4,000 crore bank in terms of profit. And outside Nifty 50, that makes it like the bank with this kind of in profit. You know, nobody realizes it, but this is a fact which I am sharing. You know, Shalini is too shy to admit it, but it's my job to bring out the facts here. I mean, just look at the size and look at the profit pool what Fed Bank actually has created. I mean, my views have been very simple that when you have a growth coming back and its asset quality is sorted out, then the price to book actually should expand. My next question is not on where the stock prices are headed, but it is on if you continue this current run rate of credit growth at your base, can I safely say that in next 3 to 3.5 years, you will double? And I'll give you my maths. Rule of 72, Shalini, 72 divided by the rate of growth, which means in that much time you will double. So your balance sheet should double in 3 years, 3.5 years?
Exactly what you said, by the rule of 72, that should happen. We are on the right trajectory. We've got the right balanced mix of businesses. We will remain committed to this course of making sure not just that we grow, we will grow, but we will also ensure that the growth is balanced between retail, wholesale, between the various segments. So it's both growth and profitability, Nikunj.
Shalini, just to wrap it up with 2 more follow-up questions. How much of your loan book you would say is still in the unsecured category? Because that is where concerns about risk management, concerns about aggressions have come out. Would you be consciously staying away from it?
No, Nikunj, just as a history, as you rightly know, we've been for a very long time haven't had much of an exposure on unsecured. And when I talk unsecured, I'm talking credit cards, personal loans, and microfinance. I'm just talking about these 3 segments because our home loans, our business banking loans, all of them are quite secured in nature for obvious reasons. These 3 businesses together are at about 10,000 odd crores at this point of time on a base of 209 lakh crores. So you can see that it's a small component. Having said that, if you notice in our investor deck also, the pivot that we have towards high margin, high yielding assets has been paying dividends. We've grown that between quarter to quarter, but in a calibrated fashion. And we will continue doing that because we do believe we have the right infrastructure to grow this. I'll just give you personal loans as an example. We've been doing, we're about 3,000 odd crores of personal loans at this point of time. We have a strategy around what we do with new to bank customers through a partnership with the likes of Paisa Bazaar, etc. And what we do to our own cross-sell base in our customer portfolio. Between the 2, we've been able to grow that business quite handsomely. Another example is MFI, where again, we've made a presence across markets using business correspondence, etc. In all instances, we've ensured that we have the right infrastructure in place from a technology perspective, from a customer service perspective, and from a collections infrastructure perspective. Putting all those blocks in place, building blocks in place, we will be growing this at the rate at which the rate of growth looks very high, Nikunj, because of the low base that we come off. But at this point of time, it's around 4 to 5% of our entire base, as you can see, 10,000 over 22 lakh crores. it's around that. Where will it go up to? It will go up in the next foreseeable future to about 6 or 7%. And if you then add things like gold, you add the higher segment business banking, commercial vehicles, and some of the other kind of more margin accretive products, will be probably about 24, 25%.
Okay. Shalini, so I'm just going to start wrapping the numbers. Please feel free to interject if my summary is wrong. Point number one, operationally it was a strong quarter. We're talking about quarter gone by. B, the uptick in cost to income ratio was a one-off. Directionally, cost to income ratio will come down. Credit card business, the one which are owned by Federal Bank, that is growing. Federal Bank is no longer just a south-based franchise. I mean, thanks to the expansion, it is now a national bank. Third, you are not big in unsecured, but that is something you will see the base effect as the bank will grow. But more importantly, and this is purely from a market curiosity, if I summarize it, and these are your words, that the search for succession at Federal Bank is still on. The search committee has not zeroed on any names. The process is on, and when the search committee zeroes onto the name, they will go to RBI, and then RBI will take the decision. So anybody watching the show, please write it down and do not speculate on what is happening. Am I right?
I agree with you. Do not speculate. The search committee will be doing its responsibilities. Yeah.
And the search committee and the board, which is what you represent, you are open to the best candidate that could be internal as well as external.
Best candidate for the job, yes.
Have I summarized correctly?
Yeah.
Have I missed on anything?
Yes.
Have I missed on anything?
No, nothing at all, as usual.
Well, thank you very much for joining us, and have a great day ahead.
Thank you. Thank you so much. Bye-bye. See you.
If you like this video, then like, share and subscribe to ET Now.